on this whole range right here. Yes, you can refine your order block. This is there I personally would never focus on, but this is how in reality we find these high probability areas. In this one, we will talk about how you arrive to high probability entry based on the PD arrays that you choose, because it is really important. I see so many traders read the structures correctly, find the main draw on liquidity and all of that. They get on the right side, time of the day is on point as well, but they simply lack understanding of which PD array they can trust versus which one has some low probability signs around it, when you simply want to wait for price to actually drop into it, show a reaction, and only then you can actually start trading away from it. So talking about order blocks and those days when we have one-sided delivery, so we can see that right from the New York Mehmet open, price started consolidating, gave this expansion to the upside, pulled back, and right where the London kill zone began, which is 2 a.m., this window right here is from 2 a.m. to 3 a.m. This is there. Usually I don't even participate in the price action. Not that I always skip on it. There are times when we get such clean price action, low or high of the day, that I really just jump on board if I see order flow kick in here on the execution timeframes. But in most cases, as you guys know, I focus on the RT window. So from this situation right here, RT window is obviously what comes to the long band kill zone is from 3 a.m. to 4 a.m. This is very usually these strong structures take place, strong reversals and stuff like that. Sometimes it is the low of the day or high of the day, and sometimes it is just a simple, strong development, strong price action. And you can see that this is exactly what happened in this case as well. If we just focus on this OT window, notice how price nicely ran some sell side liquidity right here, give this sharp low, expansion to the upside, and then it continued running higher towards other buy side liquidity pools. So overall, one thing that I want to highlight right away is that PD arrays alone are not something that will absolutely make or break your trading. Again, I will always come back to the main factor that you firstly must align with how the daily time frame is looking, if we have a clear direction for the day or not. If not, then on the lower time frames and execution time frames, obviously you want to see absolute perfection and again very clear draw on liquidity that you will be aiming for. When we have all that, obviously we can dial down, focusing on the time of the day, which is one of the most important parts as well regarding all of these trades. So you can see that this low right here formed at 3:35 a.m. and from there it expanded to the upside. So now breaking this specific example down, we are not trading it. Again, this is just for example purposes, and just from this 5-minute picture, focusing on the main window when you are refining your entries, which is from 15-minute time frame all the way to 1-minute time frame. So this is where you want to refine all of your order blocks and fair value gaps. So in other words, what we have on the 15-minute time frame, the fair value gap, the order block will hold a lot more weight compared to the N1 or N2. So now I see so many traders focus on extremes. And what I mean by that is when price rallies away from their point of interest, they focus on the extreme type of an order block, which would be something like right here, which is not even a proper order block to begin with. The clearest type of order blocks is when we have a strict, neat one candle, let's say on the 5-minute time frame, which is just a simple one block to the downside regarding a bullish order block, which on M5 5-minute time frame is just a simple type of a pullback right here. And what we would see on the M1 is a lot more price action, obviously seeing a few candles like that, a few downside candles. So what is on M5 just a one simple candle? On M1 is obviously a few downside candles. But this doesn't mean that we don't focus on this whole range right here. Yes, you can refine your order block, but focusing on the very extremes, like in this example right here, will leave you without an entry. And in most cases, it's not even a high probability order block to begin with. High probability order blocks are born in movement, in displacement. And this is exactly why high probability order blocks form whenever a price gives a one-sided drop and imbalance type of movement to the upside if we are talking about a bullish development. So this whole area right here that naturally in most cases will act as discount side, measuring this whole dealing range. This is where the open of the order block and the mean threshold of it being the 50% will usually be the most important part. But now again, talking about the area that holds the most weight, not the very extremes. How you come back to this is when, for example, in this case, case, you can see that we have this pullback on the M5 on the 5-minute time frame. This is where I personally would never focus on this last candle right here when expecting for this pullback to take place. In these type of situations, what we always want to do, let me delete all of these drawings right here, is again, firstly, completely ignore all the structures that form from the New York midnight open to the open of the London kill zone, putting the most weight for the whole window what comes to 3 a.m. to 4 a.m. regarding the London kill zone, and regarding the New York kill zone, our RT window is right here from 8 a.m. to 9 a.m. And you can see again how this reversal happens right here as well inside of this window. Everything past that again will usually bring you and give you clean entries, clean opportunities once price actually bottoms out right here inside of these windows. This New York reversal right here happened at 8:50 a.m. And again, as I always mention, we are operating here on the New York time zone. So now what we would do in this type of situation, obviously, again, not talking about lower time frames, daily time frames, not talking about actual entries, just this specific situation. What I usually do from execution time frame, if we are, let's say, right here on the 5-minute time frame, I will take this low right here, drag it to the very high, identify the discount side for myself. You can see that here what we have is the discount side, and when we look left, what we have is clear imbalance, but again we have 3 candles right here. And what comes to this bearish pullback, what we have here is 4 downside candles, 1 upside candle, and 2 downside candles. It is just a simple pullback from the 5-minute point of view. What again we don't want to do is focus on these extremes. People often forget is when price pulls back this deep to the discount side, it will very extremely rarely go for the extreme before bouncing higher. And what I mean, if price drops this far into the discount in the first place, what it will usually do, it will give this bull trap right here and end up completely out this level before continuing to the upside. So this is another reason why you don't want to look and focus on very extreme type of situations. So again, what we do, as on the 5-minute time frame, we see this massive pullback. This right here is not just one imbalanced candle, but a few imbalanced candles as well. What we can do, we can go to the 10-minute time frame to simply see if the whole structure and vision changes or not. And if it does, great. If it doesn't, we can go to the 12-minute time frame, 15-minute time frame. But in this case, you can very clearly see that all of these imbalanced candles now became this one clear range right here. And what comes to the order block, now we have a lot cleaner type of downside candles right here. So from 10-minute point of view, now what I would do myself is focus on the open of this candle right here. This would become the open of the order block, the main area right here, and then I would find the mean threshold from the open to the close of this candle here, ignoring the wicks completely. So what we would do here is draw the midpoint. So here we have the mean threshold. So this is our zone, and in the middle what we have as well is this bullish fair value gap. So now notice how when you focus on these actual developments, on these actual clear movements, how price ends up focusing on these developments, if again, of course, they have all the other most important puzzle pieces in place just to expect an execution time frame or the flow to continue. If let's say they would delete all of that and focus on the 15-minute time frame going one level higher, this is what you would see in this case right here. 3 downside candles that we had on the 10-minute time frame become 2. So that is even more clean. But regarding the imbalance, this is where we would stay, leaving this 10-minute imbalance right here. Because here, from the 15-minute point of view, it again becomes a 2-candle imbalance. You can see that we have this and this right here. So regarding the order block from 15-minute point of view, this would be our open, and this right here would become our mean threshold. Notice that again, doesn't matter from 10-minute point of view or 15-minute point of view, price ends up not reaching into the mean threshold midpoint of these consecutive downside candles right here, opening from the open to the close. Regarding a balance, we are leaving this 10-minute imbalance point. So now if we go back to the 5-minute time frame, this is how everything would look like. And a lot of you guys notice and ask me regarding the trade breakdowns, the trades that I actually take, why on the execution time frame, like 2-minute, 5-minute, my order blocks imbalances are not making sense. And if let's say I would be breaking this trade down from the 5-minute point of view, not going on the 10-minute or 15-minute, you would be extremely confused what is even going on here on the 5-minute, why my order block is all the way up here, because again, from the 5-minute point of view, it just simply not making sense. Same with this bullish imbalance. But this is where those actual clean high probability order blocks and PD race are born. If again this day I'm focusing on the buy side target, on the buy side level, that's it. This is my draw on liquidity for the day right here. And I'm looking to enter to the upside. Price giving me a low right here at 3:35 a.m. Focusing strictly on the PD race. Again, from the 5-minute, it would make 0 sense. But if I would name everything right here, this being 10-minute imbalance, this being 15-minute order block, that's when everything nicely connects. And why we do that is, again, we don't want to focus on the extremes. We want to adapt and adjust to the whole picture, to the whole vision, going from 2-minute to 5-minute to 15-minute, 10-minute, seeing which time frame makes the most sense, which time frame creates the clearest PD range. And we focus on that and then end up dropping back to our time frame that we actually execute on. And again, for me, usually it's either 2 minutes or 5 minutes. So don't be scared to play around with the time frames. Find the cleanest one. Sometimes it will be odd looking time frame like 12-minute. Sometimes the clearest order flow, if let's say the whole development is smaller, and let's say this is not a 5-minute time frame but 2-minute time frame, if we would go to 7 or 8-minute time frame, then we would have this one clear block, one clear order flow, seeing a reaction and rejection from that point, looking for entries. This is where you would actually be on the right side, looking for the right things, not identifying some dealing range and focusing on extremes like in this case, then again like in this case right here as well. You want to identify high probability blocks and focus on that. So focusing on this pullback that we had right after, what we would do next, again from the 5-minute point of view, I think you guys can clearly see that we don't really have much going on. But if we would move this to the side, we see price leave this high and start pulling back. The first thing we do, we identify this dealing range, we have discount, we look left. From 5-minute point of view, the imbalance is just one clear candle, so we don't need to do absolutely anything from this side. But regarding the order block, we are not sure if we could see at one clear block or not. So what we do, we go one step higher. In this case right here, we would be on 6-minute time frame. Not a lot of vision, so we go to 8-minute time frame. Again, not a lot of vision from this point as well. We go to 10-minute time frame. Now from the 10-minute point of view, what we have again is extremes right here. So regarding order block, we don't focus on that. So we go one step higher. All right. So now from the 12-minute point of view, finally what we have is a clear vision, one clear downside block regarding this pullback, this whole pullback right here. And this is when we can focus on this one huge block. And this is where we have our open of the order block. This is where we have the mean threshold right here. Let me actually take this so we have it nice and simple. And this is our mean threshold. So then we drop back to the 5-minute time frame. Nothing will make sense from the 5-minute point of view. But notice how perfectly price ended up rejecting this exact area where the biggest bulk of volume was regarding the order block and the fair value gap. Price didn't reach into the fair value gap. It literally just stopped 0 pips above it, literally at the high of it. Regarding the order block, this is where we have the zone. Price dipped into the discount and rallied away. This ending up being a 12-minute bullish order block. So now if we continue right here to the nearer kill zone, this is when we focus after this reversal. Notice what happens. Price starts rushing to the upside, leaving this 850 RT window lower here. And regarding the imbalance, obviously you can see that we have this one neat candle, so we don't need to do absolutely anything else. You can identify this candle right here, this 5-minute bullish fair value gap. Now regarding the order block, this is then again you can start focusing on extremes like this level right here being a propulsion block, because we had this order block, even though it was an extreme level, then we had another bearish downside candle, so this becomes a propulsion block. But again, this is not what I personally do. Even when we have price not dipping into the discount side, like in this case right here, measuring from the very low to the very top, you can see that price didn't even reach into equilibrium, stopped like less than 1 bit above it and reversed. Regarding the order block from this whole pullback right here, the area that we would actually focus on is, again, I would go higher. So starting with 8-minute time frame, we have this 3 consecutive downside candles. So this is already a start. We can't mark this for ourselves right here, but we can even go higher. You can see now we have 2 downside candles, which is again a very clear order block. In this case, notice how perfectly price reached right into it before expanding to the upside. And if we go even higher, like 12-minute, in this case, you can see that from that point, we don't really have the clear vision. We have this whole massive pullback. From the 15-minute point of view, same exact thing. We don't have clear vision. Focusing on the extremes rarely work again. You can see that this 15-minute order block was missed. So from the 8-minute point of view, we had pretty much the clearest type of order block, or even 10. having these two downside candles, this being the beefy one, which is exactly what you want to see. And if we, let's say, focus on the 10-minute fair rally gap, you can adjust it to this point. But again, 5-minute fair rally gap was already valid. We had just one simple candle. So it is up to you if you want to adjust it to the 10-minute candle as or the block based on this time frame as well. So again, that's up to you. You can, in this case, even identify the consequent encroachment. Notice how perfectly price aligned for this area. And dropping back to the 5-minute time frame, looking at where price pulled back into, it actually wouldn't make much sense regarding the order block. Most of the traders would see this horizontal level and would ask where it's coming from, what is this magic or something like that. Same with this order block, same with this order block. But this is how in reality we find these high probability areas, high probability P raise that price will focus on. Notice that all of these order blocks are coupled with bullish imbalance. So bullish order block must be coupled with a bullish imbalance. This is the case right here. This is the case right here. This is the case right here. Ideally, the most ideal points when it's in the middle. So this one and this one being the most clean type of delivery regarding bullish order block. So that is all for this one. I hope you enjoyed it and we will talk soon.